Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. And I was just I want to reiterate, um, uh, you know, thanks to Paulie because Paul did a great job covering. And Rich said, "Hey, good morning, Blake. Paulie did a great job over the last couple of days. His efforts are massively appreciated. I know it was tough for him, and absolutely. I mean, he not only was he covering for me, but he was also covering for Chris Asaro on London Calling, as Chris is in the United States visiting his." It's his grandmother's 100th birthday, so between the two of us, we were out, and Paul had been covering, and then Steve Bilby as well, who has been covering for my lunch money webinar, from what I understand. So again, a huge thanks to my team for allowing me the flexibility and us the flexibility to take some time off. So much appreciated. Now let's discuss what's happening here with the euro dollar, and a lot of you guys are probably wondering, why hasn't the euro fallen more aggressively than it has? And I'll tell you something. As far as the euro goes, I am still, I think, first of all, I still believe I believe the market's a little at odds right now with what is going to happen with the euro regarding the potential of a Greece exit, of a Grexit. I think people, there is part of the community that believes the euro will actually be stronger without Greece. I know I had originally felt that way years ago, and I still believe that that is the case. I just don't know near term if that's going to be the case, because obviously there's a risk of contagion. There's a risk of Spain or Portugal, or Ireland, for that matter, that could want a similar type of deal that Greece gets, or if they get removed from the euro, or if Greece gets removed from the eurozone, maybe those countries will look for their own independence. I think the risks at this point, near term, should still push the euro lower. All right, but the euro hasn't really fallen. I mean, the euro's held up very well, and even you can see the gap lower from the weekend. Or no, I'm sorry, this is the gap lower from the weekend 4-hour chart. Gap lower from the last 2 weeks. Okay, we recovered. Gap lower from the weekend, we recovered. Then we hit a new low, and then we bounced higher. I think it's still, we're in what I would call the apex of this wedge or whatever that we happen to be in right now. Let's remove this fib level really quick. I'm going to suggest this. While we're above 108, okay, the risks that you see in the euro dollar are for snapback rallies like we've got. I had a friend of mine actually contacted me yesterday afternoon and asked me about the euro. Said, hey, what do you think about the euro here? Is it a, is it a sell? And we were trading we were trading around here, and we just did like a stop run. I guess it happened while I was driving home yesterday. I saw the euro spike from 110 to 110.30 as I was in the car or the truck yesterday afternoon, and I'm like, man, there wasn't any headlines. It was just a squeeze. I think that the euro is capable of squeezing like that while it's above 108. I think if we drop below 108, that'll convince the market that there are lower levels to come in the euro. And I think that will convince the market that it doesn't really matter what happens in Greece. The euro is going to be moving lower at this point. But I think while we're above 108, that red line that you see there, the risks are for these snapback rallies. I think that is going to be the risk. Now, what we'll have to do is just double check and see and make sure that this support that you see here at 109.50, that's going to be important. And I think that's going to be important support not only for today, but probably for the next, probably for the remainder of the week, I would think. Any move down towards this 109.50 or 109.30, what is that, 109.10? Looks like 109.15. Okay, so 109.15 is really the key support for the euro dollar. And while we're above that, um, for the week, I think that it's going to be very messy. Now, does that not suggest that there are still some good opportunities out there? I think there's going to be some great opportunities out in the euro dollar, or excuse me, in the currency market. I think we have to turn our attention away from the euro right now. I think it's tough trying to figure out exactly where this one's going to go. I mean, I'm short the euro yen, and after the fall that we've seen in equities, or the moves that we've seen in equities, and the move we've seen in the euro dollar, I'm surprised that the euro yen isn't a lot lower. And I'm still short from 135. My cost average is 135.67. I mean, but my other yen pairs are up significantly higher than where the euro yen is. So the euro yen just hasn't moved quite as much as the other yen pairs, and I think a lot of that has to do with people not knowing exactly where the euro is going to go. Again, I think there's a group of investors that believe the euro is going to be a stronger currency without Greece. Then there's the other group that believes that contagion risk is high, and the euro is going to drop, below parity. But I really think while we're above 108 right here, the risks are for a lot of whipping around. Let me get rid of this line. We don't need this right now. Remove that. All right. So anyway, um, for right now, support is going to be at 109. I'm just going to write down 109.15, but you just know the 109.30s are going to be really supportive. 109.15, and I know it's 100 pips away, and you go, well, it's 100 pips, Blake. Are we going to get down there today? We could. I mean, obviously, everything that's happening in the currency market right now is all headline risk. Everything. So we get one comment from a European Parliament member, the euro trades down to 109.75, and then we get another comment from the Prime Minister, and the euro trades back up to 111. So you have to have really wide parameters regarding the euro right now. Okay. If you're going to trade it, I'm not even trading the euro. I actually have no desire to trade the euro at this moment. I really feel no need. Doesn't mean that there's not going to be opportunities. I just don't think there's any real reason to get super directional. I think maybe shorting a big rally or buying a real big dip, that's going to be the way you trade the euro for right now. But anything more than that is yeah, it's risky. So the weekly highs, that means since we've been trading this week, are up at 111 basically. Okay, see right there. Okay, we have this downtrend line that's it's not a really well drawn out one, but you can see we have this spike high here, that spike high there, that spike high here, and we go through this other spike, which whenever I'm trying to draw a trend line, I try to just meet as many data points as possible. Obviously the more the better. So in this case, we've got 3 data points that we're coming into, and you have to imagine if it did rally, if the euro, let me grab my pen here. If the euro rallied from here, I think any move up to 111 is going to be a good selling opportunity. Remember, you want to trade the extremes in the euro dollar until we get some better idea of direction. You want to trade the extremes. So if the euro dips down to 109 and change, might be a good long. It spikes up to 111, probably be a decent short. While you're in the middle of the range, it's that's just that, it's in the middle of the range. Let's go over to the cable. Now the pound has gotten absolutely demolished. Okay, Britain's budget The UK budget surplus is out right now. Should be out right now anyway. Let me see if there's any comments. Maintain pace of deficit cuts, says Osborne, says Britain to return to surplus in 2019, 2020. Uh, Says deficit should be cut at the same pace as last parliament meeting. GDP growth at 2.4%. So lowered growth forecast for 2015. 2016 is in line at 2.3%, and 2017 is an upgrade to 2.4% from 2.3 previously. So the UK budget surplus is out right now, and it's being talked about. So currently, the pound is sold off. We're relative strength is pretty oversold here. I assume that any move down to 153.50 is probably going to find support here. So let's take this last move. Okay. Hold on really quick. Did we just hit that? We did. We just hit the 786 and we bounced. So this is really key support for the day. You know, if you want to buy the cable here, now I'm not, I personally think it's probably going to be a better short than a long. But if you guys want to trade counter trend, that might not be a bad place to be on the long side. Right here. If you put your stops below 153, like let's say 40, you know, like put a stop down here. You see the relative strength is divergent. I'm just giving you guys a suggestion. I'm not going to get long the cable right now. I think that's kind of risky, but see how we're diverging here. So you might get a bounce back maybe up to 154 and change, but you don't want to risk more than 153.40, because if we bust through there, we're going, you know, right to 152, I would think. We're probably getting a little oversold here. So 153.50 is support for the cable. 153.50 is going to be a pretty important support. Now this is all drawn from last week, so let's get rid of this. Let's. I'm going to hang on to that line. So. Okay. So at this point, any rally back to 154.75, that's going to be sold into, because you can see this is the 618 on the way down. We severed right through it, but now you can see that we're that the rallies. This is in a 4-hour chart, so the rallies this week have been really stuffed on any move back above 154.75, or one move up here to 154.70. Hold on really quick. Man, this cable looks heavy. That was a big deal right here as support. 154.25. Actually, I'm going to write that down as resistance today. As long as we stay below 154.25, this is bearish. Hold on, this is range. This right now, it's just near-term bearish. Okay, while we're below here, it's in a big range, but right now we're near-term bearish as we came through this trend line this week. Okay, and especially as we stay below here, this 154.25. Yep. Okay. Let's take a look at the dollar yen. Now, like I said, I sold some dollar yen. I sold some dollar yen at 121.65. My cost average now is 122.68. Okay, that's my cost average in the dollar yen. I am adding to it today, my short. Um, and while we're below 122, is turned from well, we've been in a range for so long in the dollar yen, but it's turning bearish now. So now that we've cracked through some support, so 122 is key resistance, and as long as we're below there, it is bearish. Okay, so let's figure out where support is, because that's resistance now. Wow. All right. Well then, we are sitting on the 618 retracement. This is very, look at these lows here. That high, 121.47. The low here, 121.43. The low today is 121.31. That's really key support. As long as we stay, I think if we break below the lows today at 121.30, that's going to put some pretty severe selling pressure in the market. 121.30. That's going to get key support for today. Let's go over to the Swissy. So the Swissy, there's got to be a lot of intervention going on right now, because the Swissy spiked up this morning again. I mean, look at this. I don't I don't know what to do with the Swissy. Like I said last week when we broke above here, I said everything technically was telling me it's time to buy the dollar Swiss. I still cannot reconcile getting long the dollar Swiss with the situation in Greece. But technically, it looks ripe for a bounce. Um, but you guys know the risks out there. The risks are obviously, you know, with the situation very fluid in Greece. Um, the risks are that something bad happens and there's a huge rush into Swiss francs. But if we move above 95.50, that's going to start really squeezing the dollar Swiss. Okay, so 95. I guess it's 95.40 really. Let's see what the highs are. 95.40. I mean, that's going to be it's a key resistance level. Support's actually at 94 cents. It looks like we've been really well supported there this week. And just so you all know, I haven't paid any attention to the dollar Swiss at all. Like when I look at quotes, it's not even something that is factored into my head when I'm looking at it. So I'm not even looking at the Swissy. I have no desire to trade it. I don't want to, as much as I want to be short the Swiss yen. I'm just not trading the Swiss right now. Not with things, so concerning regarding Greece right now. I'm just not doing it. Anyway, 94 cents is obviously support. And I'm going to have to put in, well, we're in a range, but, really if we break above 90, 95, 40, it's going to turn bullish. Okay. Man, this dollar yen's rolling over. Good. I like it. Let's go take a look at the Canadian. So the Canadian. Now, I want to ask you guys this. How many of you guys are long the dollar Canadian? Anybody long the dollar Canadian? Amanda is. Very good. Robert, Ben, two Bens. Ben R is long from 123. Nice. Lee closed it today. Daryl said closed it this morning. Oh, look at you guys. Good. I'm hoping more of you close your dollar Canadian longs because I want to because it's just gonna that's gonna propel it higher when it breaks through 128 and you all have to chase it higher. Tim says paper trade. What is this paper trade you speak of, Tim? I don't have no idea. Joel's long from 122. Ron A is long from 121.66. Wow, you guys got some good prices. I'm long from 124.80. So Clay is long, awesome. Um, so man, Dan's long from 121.50, 123, and 124. Some good entries right there. All right. Okay, so I know a few of you guys are long the dollar Canadian. That's good. I'm like I said, I'm still long the dollar Canadian. I am looking to add. Now, I'm looking to add on a break above 128. So just so you all know. I mean, obviously I can, I can sit here and talk all day about the weekly charts, but that's what I'm looking for. I'm looking for a big move higher. There's two more entry points for me, just so you know. Above 128, which will be the breakout here, but really what I want to see happen is a break above the 130, 150, or is 131. It's really a break above 131. That's when the momentum is going to start really carrying higher. So I want to nibble a little bit above 128 and above 131. That's when we know we've got a breakout at least to 135. Okay. Um, and then hopefully out to 140 will be our next and final stop. But I have to see a lot of things happen in order for me to get long more of the dollar Canadian. And one of the things that I really want to make sure is happening in the event that I buy more dollar Canadian is the euro is making its way lower. So, you know, if the euro makes it down to 109, that'll make me feel a little bit more comfortable. If the cable's back down towards 150, 151, 150, that'll make me feel more comfortable. I can't get long too much dollar Canadian if the dollar Canadian is the only dollar currency moving higher. Okay, that to me is a little risky. So I don't want to continue to add the dollar Canadian without support of the dollar in other currencies, if that makes any sense. All right. Anyway, if you look though at the dollar Canadian, we're past the 786 retracement, which was at 126.30 from last week. Okay, that's from the very high to the trend low. We're past that, and what we're doing and what we've done all week is we've held above those levels. So that tells me that a move to 128 and a quarter is coming. It's just a matter of time. Okay. The question is, what are we going to do in between, now and then? So let's focus on that. Okay, this is a 4-hour chart. Well, right now, 123.70, major support. And if this breaks, that means a correction is going to start. Okay, that comes in at 126.70, 126.70. So 1.2670. Okay, while we're above there, this currency is bullish. Resistance 127.78, which will be basically 127.75, well, 127.80. We'll write that down. 127.80 and then 128.25. I think it's a quarter. Let me just double check that. 128.32. 28.32. Okay. All right. And it's bullish. All right, when I come back, we're going to do the Kiwi, the Aussie, the dollar index. And man, have you guys seen these Nordic currencies? Have you seen the US dollar Norwegian krona? This thing blew the hell up. I mean, it is ripping. We broke that 8 and it's been nonstop ever since. This US dollar Norwegian krona, especially with crude oil getting demolished, this looks like it's going to go so much higher. All right, to me. Anyway, all right. I'll be back in a few moments. When I come back, we'll continue on with our analysis. Don't go anywhere. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back and thank you all for being here. So we're going to get started with the we're going to get started here with the Kiwi. So the Kiwi. All right. Um, I have to say these commodity currencies, they look beat the hell up. I know iron ore is getting crushed. I know China is getting crushed. I see all that. Okay, but I started buying the New Zealand last week when I started shorting the pound New Zealand, and I shorted the Aussie New Zealand. And if you look at the Kiwi dollar, I can't say that this is at a level, at a price where I specifically want to be long the New Zealand, but it is pretty oversold. Okay, and you can see, we're now starting to find some support down here. Now, like I said, I don't believe this is like the 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 place that I want to be long the Kiwi ultimately. I would prefer to be long the Kiwi dollar down here at 60 cents, maybe 64, maybe at 58, but that doesn't mean that we can't see a near-term bounce. And if you look at the weekly chart, I know we're only halfway through the week, but we're already starting to see some sort of bullish activity in the Kiwi. Now, personally, I think that a retest of this downtrend line is very doable. But every retest that we've had of this trend line has resulted in just a roll back over. So I don't see why this is going to be any different, especially with the situation in global equity markets, China, it's just getting worse and worse and worse. So, what I would be thinking at this point is any move in the Kiwi dollar. Now, think about how long it's going to take us to get here. Okay. This is 67, basically 67.50. We're at 67 right now. Think about any move back up here over the course of the next 12 hours. It's probably going to be a good selling opportunity. Okay. Remember, we still have a lot of time left in the week, so 67 and a half. If we get up there, I might actually short some New Zealand yen, is what I'm thinking. I'm not really too sure what I want to do with the New Zealand dollar per se, but I think the New Zealand yen I'd like to be short because I want to be short the yen pairs across the board. New Zealand yen is one of those that I'd like to add to my portfolio, if you will. Okay, 67.50 resistance. Okay, 0.6750, and we could even make it a little bit further. Okay, maybe 67.70. I'll write that down too, just to have it. 6770. We are still in a very bearish trend. I know we're up today, but we're still in a very bearish trend. Keep that in mind. Okay. Support. Obviously, support is right here. $66.20. Key support. We have a bit of a double bottom here, which we may have already completed it. So see that double bottom right here? It takes us to 67.30. So looks like there's some more. There's probably a little bit more juice left in the kiwi. So here, let's so you guys can see it. Double bottom extension. Okay, that's where it should take us. Um, but like I said, any move up to 67.50, probably a decent short. Let's go over to the Aussie. So the Aussie is just getting just beat the absolute beat down. We should be approaching some support though, not too far away. 72. Okay, so somebody wake me up when we get to 72 cents, because that is probably going to be some pretty key support. Um, I read it. I read this one trader. She's like, I'm gonna buy the Aussie all summer long. And I'm like, man, I guess. Problem is, how much it still can. I guess you better have a pretty long time horizon to do so, because it looks like it's still going lower. Pretty divergent here, but just because you have divergent relative strength doesn't mean that it's going to stop. I mean, if you're not a believer in that, then you have to go just look at the dollar yen and what happened to the dollar yen when it went from 80, 80 yen to 105 yen. It was divergent relative strength the whole way up. And if you traded only on relative strength and shorted the dollar yen the whole way up, you would have gotten killed. So you can't use that alone as an indicator of what to do. We do have divergent relative strength, which suggests that there could be a bounce in the Aussie dollar, but man, I don't know. I'm not seeing it just yet. But let's see here. Low to high. 127% extension of this 2015, basically the 2015 move. That comes in at 73 and a quarter, or 73 and a half. So when we get to 73 and a half, that might be an interesting place for a bounce. Okay. Uh, 73, 73.50. So we're going to write that down. 0.7350. By the way, we're still in a very bearish trend here. Resistance. I mean, we've got a long way to go to hit any type of resistance, so. All right, let's. So by the time we get here, let's think about this. Let's plot it out. Let's imagine. Okay. So if we get a rally back to 74.75, this is a sell zone for the Aussie. 74.75 would be the top of that sell zone. So 0.7475. And we are in a bearish trend. Okay, let's go over to the dollar index. And the dollar index hasn't given us much to look at. And the reason why is because, obviously the euro's real choppy right now. And so I don't think the dollar is going to give us much direction. to 96 and a quarter, the low here from the other day, 96.30. Today's low is 96.33, so, and the low from Monday is 96, so I'm going to say 96.30. Resistance doesn't come into play until 97.75. Dollar index is pretty tough to use right now. 96.30, and I know this isn't going to do you any good right now, but 97.75, and we're in a range there. Now let's take a real quick look at the peso. I just want to take a quick look because I haven't, and just so you guys know, until last night or yesterday afternoon, I haven't been able to look at charts. I mean, I could see them on my phone and my iPad, but they're not that good. I mean, you know, looking at charts on mobile devices is really tough. It's tough to do. So, all right. So here is the peso, and this peso right now, by the way, here, let's remove that really quick. Let's do this. Let's remove that. This peso is wedging, like bullish wedging higher. Just so you guys can see it. For those of you that trade it, this thing looks like it's going to bust a move higher. It's just poised. U.S. dollar, Norwegian krona, really, really strong here. We've surpassed the 786 retracement, and I mean that's strong. That is really strong. Remember, Norway's cutting rates. Swedish krona, this thing looks like it wants to break out too. Above 860, and this thing's going to get a little squeeze action going for those of you that trade the Swedish krona. Very, very bullish there too. Anyway, I'm not going to write them down because I don't see anything that's set up in particular, like right at this very moment in time. So anyway, all right. So here's your bias chart. I'm gonna leave you guys with that. Let me take a few of your comments from this morning. So where are we at? Going all the way back to